Google is down 40% from its all-time high. Mo, check this out.
That's never going to happen.
We literally go back and look at the comments from Google videos from a year and a half ago. February 2nd, 2022, just this year, $152 a share. It's now at $89. Our software, the reason we're doing this video is I was literally upstairs preparing to come down and do videos, and I got a notification of our software because I had Google on my watch list, and so did Mo.
Yep, $90.
And I had it set for $90 so I can sell puts on it, and it hit $89. It went below $90. It is currently down over 40% from its all-time high. Now, does that mean you go out and buy it?
No.
What does it mean, Mo?
It means go and take a deeper look because it's getting pretty close.
Yes.
To potentially buying it.
I think looking at 52-week lows and when stocks fall a lot from their highs is a great way to start looking at investing. Yeah. But remember, stock price and stock value are different things. Just because a stock is down 40% doesn't mean it's a good deal. Prime example would be if I own a home that's worth $500,000 and I just sit there and say, let me put it on the market for $5 million and see what I get. And nobody buys it. All right, fine. I'll drop it to $2 million. Oh, screaming deal. It's down from 5 to 2. No, it's still a $500,000 home. And that's the key. Every investment is the present value of all future cash flow. And Google is a stream of cash flow. Right, Mo?
Yeah, good cash flow too.
Good cash flow too. So let's go check this thing out. Oh man, look at this. 5-year return on invested capital, 14.5%. Now let's go check out the 8 pillars immediately.
Yeah, that's where I went.
Oh, look at this.
Yep.
Our friend. These were much higher before.
God, I love seeing those PEs at 25 instead of 40.
And these are the 5-year PE and the 5-year price to free cash flow.
Yeah.
And guys, remember also, they did a 20-for-1 stock split recently. This is based like $1,800 a share earlier this year, whenever they did it. Very low debt, less than 1 year of the average 5-year free cash flow in debt. Cash flow growth, net income growth, revenue growth, high ROIC. Guys, Google has the 2 largest search engines in the world. You may have heard of the first one called Googl.com. And I know for a fact you've heard of the second one. It's called YouTube.com because you're on it right now. That's the 2nd largest search engine in the world. They own both of those. They are spitting cash out. Are there issues at Google? I'm sure there are. They're talking about laying people off, they're talking about a decrease in the growth of advertising. Mo's eyes just went big. Why did your eyes just go big?
Because their cash flow has basically doubled since 2020. Their revenues are just skyrocketing from 2020, and the stock price is still down 40%.
So that's the key. Now, again, it doesn't mean it's a good deal, but it just shows that performance and stock price don't always go the same. Look at Cisco, Intel, Micron from 2000 and now. Look at their revenue and profit. They've all gone up a tremendous amount, and their stocks are still down from their 2000 highs. In 22 years, the stocks have not gone higher than their previous highs, and yet their revenues, profit, or everything are up a lot. Think about that for a second. What would have to happen for that to occur? Overvaluation, when you pay too much for something. So what I'm trying to encourage you to do is don't pay too much for a company. Now, the hard part about investing is that it's an art form, and we don't know what the future holds for Google. So Mo and I like to do this stock analyzer tool where we do 10 or 20 year analysis because I believe Google will be around for a very long time.
I would have to think so.
And the reason I'm bringing it up today is it caught my attention when it was down again below $90. Because it recently went to where, Mo?
It went over 100.
Yeah, I thought so too.
It dipped down to 83 and then it rebounded over 100. And
November 30th, it hit 101.45 in the close.
Yeah.
All right, so the whole point here is that it's going to go up and down. So it's up. It's down 12% since November 30th. It's down 38% year to date. It's down 37% in the last year. It's up 60. There's all these numbers here that our charts show. Wonderful. But at the end of the day,
I think it's also important to point out that when it went to 83, I did have a lot of people message me in the community like, man, I missed it. And I'm guys, stocks don't just go down and go up and they're gone forever.
Yeah.
You're going to have this back and forth and it's going to take time. And that's the patience that you learn.
And the big key is you have to be okay by following a lot of stocks to not buy stocks unless they're at the price you sit there and say, I must own the stock at this price. Mm-hmm. So the question we need to ask ourselves is, what price we want to own the stock at. So let's look at analyst estimates to see what they project for the near-term future on the Googly Moogly. All right.
Wow. Nearly a little less than double.
Little less than double, but still some good growth in earnings per share.
For sure.
Now, this is all analyst estimates. And revenue-wise, okay, it grows fast and then really slows down. Mm-hmm. Who knows if they're right or wrong? So whenever I look at a company, I think about 3 questions. 1, do I think the company will be around for the next 10 or 20 years, essentially the foreseeable future? Mo, do you think that about Google?
Yes.
Okay, I agree. 2, do I think Google will be generating more revenue and profit over the next 10 to 20 years than it is today?
I think yes.
I think so as well. Now, anything can happen, but again, when it comes to investing, if we knew all the answers, we'd make one investment and we would just pick the best return. But we don't know all the answers. That's why we buy diversified portfolio of stocks, right? And even people who are very, very in tune will buy 8 or 10 stocks. Third question, based on the previous 2 questions, can I pay a reasonable price today for the company to get me an ample return on investment that makes it worthwhile?
Find out soon.
We will find out. And that's what the issue is with investing. Can you pay a cheap enough price today? So Mo's going to do, would you want to do the 10-year or 20-year?
I'll do 10-year.
Okay, I'm going to do the 20-year again. So I'm going to look at Google over a 20-year period. Now, when it comes to 20 years, guys, the bigger and bigger Google gets, the harder it is to grow at really high rates of return. Now, the good news is the world's expanding. We're getting into a lull right now. So I'm going to make some assumptions on the low, middle, and high range of my revenue growth. But remember, don't get masked in the fact that the next 3 or 4 years will be much higher than the last 3 or 4 years. So let's go here. Okay, profit margin. You know, I've been even wondering if I should do the PE the same lately.
20 years or 10 years, you're saying?
No, just all 3. Because to me, it's like, yeah, I think I'm going to do that. I think I'm going to do that for the first time here.
Especially a company like Google.
Well, yeah, it's like the PE. Why would the PE be high? I don't know. So I'm going to do the same PE.
Okay.
So I'm going to start talking about mine.
Okay, go for it.
Well, the funny part is, Bo, what'd you do for your 10-year revenue growth?
369. I had a feeling you were going to go 369.
Because I look at it going, okay, 9% a year growth for 20 years. It's 2.5, 3 times. It's like, okay, that seems reasonable.
I actually had in there 4,610, and then I switched it back to 369.
Yeah, I don't. So that's the thing, guys. We're having this discussion. I want you to remember that this is the key part of investing. We don't know what it is. The point is, do I think 3% is low? Yes.
I think 3% is low.
Do I think 9% is high? Yes.
I think 9% is high.
But do I see how it could happen? I'm like,
yes.
Yeah, I don't see like this world of like, nope, impossible. I sit there and say, okay, if the world grows, if this happens, yeah, I could see this really actually happening.
Let's say a recession lasts and down spending on ads is 5 years. Okay, maybe this can happen. Let's say it is 18 months. Yeah, this could happen.
Yeah.
And everything just booms back. I don't know. And that 6% is probably that middle ground where things are more likely than not going to settle around 6.
Let me ask this question, Mo. What do you think the chances of revenue growth for Google being 9% a year for the next 20 years?
Don't think it's that high.
Right. What do you think?
Do I think yes or no?
What percentage?
Oh, I don't know. Less than 50?
Oh, yeah. I was thinking 10, 15, 20%. Yeah. But the point is, guys, I want to see what my high range is. Yeah. I want to see what that is. Like, what is my max that I'm looking at going? Because it helps you keep in perspective. How is this price on Google today? Mm-hmm. Like, let's say this high number comes in at $60 as the value. You know it's overpriced here.
Right.
That's the key for why we do
this.
But
if that number comes in and says 120, then I'm like, oh man.
Yeah, and then I'm like, okay, or 200.
Yeah.
I might be like, okay, well, it's not
terrible.
I would say,
what am I missing with that?
Yeah, I'd be like, okay, I'm missing something. All right, next, profit margin. Mo, what'd you do?
I did 21, 23, and 25.
So I did 21, 22, 23 for both profit margin and free cash flow. And I don't think it was wide enough. I think I'm going to change it now to 20, 22, and 24.
Okay.
Now, PE, I did 15 all the way across the board.
I did 14, 16, and 18.
Okay, and I did the same thing for price of free cash flow, 15. Now, for my desired return, I did 12, 14, 16.
Same here.
Now, guys, as I make higher assumptions, the likelihood of them happening are lower and lower. So I need to make my desired return much higher to give me a bigger margin of safety. I hit the analyze button. I just changed my watch list to $85.
Huh.
Look at this.
That's funny.
Low price of 50, high price of 80, mid price of 65.
Low price 57, high price 91, middle price 72.
So guys, I'm looking at this saying, all right, Google's getting the sweet spot. I don't look at this thinking to myself, no, this is crazy. Look, it's all right. No, but it's not that far off.
No, my number, but my buy number is 75 probably.
So I have puts below 70.
Okay.
But I'm being more aggressive. I'm being like more conservative now because I do think the markets are going lower.
Yeah.
I do believe the NASDAQ is going lower. I think I'll have an opportunity to buy Google at lower prices. Now remember, what I'm willing to pay for it is a lot different than what you're willing to pay for it. Warren Buffett always says that when he does an investment with Charlie, their intrinsic value ends up being higher than most people. They want to deploy a lot of capital. There's a high return on invested capital in this business. But if you like this, and you like all the software, check out everythingmoney.com. The software is awesome. You can use all of this. You can be part of our community because people in this community love Google and love talking about it. So check it out. We have a risk-free guarantee. Sign up. Use it for a month. If you don't like it, money back guarantee. Thank you very much for your time.